Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And world on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you get it time. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I wasn't sure if the microphone was on there. I was drinking water. Hey, we've had a pretty crazy week. Can you believe it's only Wednesday? I'm sitting here thinking like it must be like Thursday. No, it's only Wednesday. Well, let's see what we got here. Well, first of all, I think we do have some news at the bottom of the hour. Yes, we've got US GDP here in 6 minutes. Okay, so going to the chart, I'm going to start with the Treasury. Treasury, we saw a crazy move yesterday, and we caught some of that and got out right there. It does look like if we had held out till after the auction, we could have gotten a little bit more out of it, but I don't think that the time and stress would have been worth it on that one. Overnight, though, we had a little bit of a move up. So now I kind of have to ask myself, well, does it make sense from a CTA strategy kind of perspective to go long? And I do kind of think that at least until the end of the week that we might continue to see some buying pressure, but after that, I'm not so sure. I kind of think that the Treasury is going to be really hard to trade here for the rest of the year because, again, like some of the analysts, like Goldman Sachs is saying 2.6, I think it was. And we're basically 2.4, close to 2.5 at some points. So it kind of suggests the analysts think that for most of the rest of the year, we're just going to go sideways, right? And in the ES, they struggled a little bit off of the open, and it was kind of a hard day from a day trading perspective. But in the end, they moved up. So equities are pretty happy. We're still seeing some of this gamma squeeze behavior, though. So I'm a little bit worried about their ability to hold this in the long run. Come next month, things might change, right? Oil, man, this whole thing in oil, big down move. It recovered all of it. They're back to where they were. So basically, all the moves from the Ukraine peace news yesterday is kind of like retraced. Here you can see it in silver and gold. They dipped below that 1900, but as soon as you get below 1900, buyers show up. So it does seem like Russians or somebody of that nature is supporting price down there, at least for now. And then Copper doing pretty good. Now we have seen some currency moves a little bit here. Bitcoin hasn't really gone much of anywhere, but the euro had some movement overnight, and it looks like the dollar is continuing to get a little weaker. Interesting. So like here, corn is popping off here. That's interesting. Gold, silver. Not really seeing anything move in the treasury, so which is kind of interesting. That's kind of interesting to me. Okay, so let's come over here. People's Bank of Canada of China economic growth is being hampered by supply shock, weaker demand, and weaker expectation. FX Street News. GameStop stock closes lower on Tuesday after being up nearly $200. GameStop stock looks to have stalled for now as AMC also falls. The meme stock has been up as much as 46% the past week. Trying to talk them down a bit much, don't you think? Because when I look at yesterday, I just see a doji. We'll see if they can keep it up today. I mean, if they're able to pull out another buy, today, like this could get real crazy real quick, right? Well, so we got to talk GDP news, don't we? Well, we had the US ADP. Employment change was 455 versus an expected 450, so that looks pretty much in line. Oh, we got Fed's Barkin is speaking here in 45 minutes too. Okay. Good morning, Vietnam and gold. Yeah. I don't know. I mean, the problem, it does look like there's some support here in gold, but the problem is that it looks like it's really hard for it to push up any further, you know? Whenever it gets gains, it's really hard to hold them. Like, remember our troll, he was buying, oops, I didn't want to do that. Our troll was buying gold, and he had like all these aggressive targets and everything, and they didn't come even close to it. I wonder if he held it, because if he held it, he might have got stopped out, or he could just be a lot of stress for not a lot of gain, you know? Well, I got a minute to go here, so. You missed the corn pop? Man, I think it would be worth trading corn just so that I could say there was a corn pop, you know, every time that corn moves up. Micro's pulling more aggressively than the irregular treasuries. That's curious. Look at that spread. We're still waiting on the GDP data. It's delayed for some reason. Okay, US GDP quarter over quarter final 6.9% versus an expected 7%. So nothing too crazy. Okay. Well, I want to see those core PCE prices final though. Yeah, that's not. Core PCE prices 5% versus 5%. US PCE is 6.4%, but that one they don't even put an estimate on it. It's like, because you know energy and all that stuff. But core PCE price is 5%. That's actually really good, right? Mm-hmm. Well, I don't know, guys. Based on the reaction to that news, which is basically no reaction at all, it kind of makes me question whether we really even want to get involved today. Yeah, that's a little. It's a little tight, and I'm worried that remember the other day we had that time period where it did nothing for a really really long time. It was like super tight, a huge move overnight, and then almost the whole regular session it barely went anywhere. Stock sink after Zelensky comments. Did have a bit of a little downturn there in the ES that I didn't really highlight. ADP shows broad-based gains in March. Services jobs soaring. The Fed owned the bond market. Now it's breaking it. Yeah, right. Crypto pop. Oh yeah, and I forgot that that's what his name was. We should just call him Corn Pop now. Listen, Corn Pop, you're on time today. Well, you're a little bit late, but you're relatively on time compared to yesterday. So good job. I don't see too many stories here. Just what was the Zelensky comments exactly? Zelensky poured cold water on that hope by noting Russia is sending new forces during a speech to Norwegian parliament. He also warned that he sees a risk in the Black Sea from Russian mines. That headline triggered selling in futures and algos, two stocks overnight lows. Gold jumped on the headlines. Oil was also bid. Will the debt buyers step back in because they know better? We'll see. I'm glad I'm not an oil trader because I bet you that if I was an oil trader, I would have caught like some of this move and think that I'm super cool and then like lost a lot of it. But I guess I've kind of already done that in the treasuries anyways. I think we're stabilizing in the treasury. At least with how we're trading. We just got to make sure to not like have something crazy happen on the non-farms on Friday and blow it all, right? Did you hear my chest pop there? I think I fixed it. Fix my shirt there. That's a little better. Well, probably, you know, even though it looks pretty quiet, probably the way to go because of the end of the month thing is to buy. I'm not so sure about doing it over here in micros. I don't like the spread and the prices that they're giving us, but we'll take 09.5 there. Actually, let's take everything. We'll take everything to there. How about that? Okay. Kind of a degenerate gambler kind of, take on a lot of contracts move. Notice the liquidity is super light too. Like the news is past, liquidity has not recovered at all. Okay, we do have an ECB speaker at the moment, so that might be one factor. So what do you think we want to go for here today? $500? I didn't need a lot more contracts than that to do $500. So I think what I will do is instead of taking the profits on the one contract, because maybe you could do that, I will just kind of relax here. A Ukrainian negotiator says that he is optimistic after the talks. I don't think that I want those contracts anymore. In fact, let's just puke here. Let's just puke here and let this slight volatility pass. I don't know if the S&P 500 definitely jumped there. Remember, it was around 4605 yesterday, right? Do you think oil is the most predictable? I don't know. Well, I think I disagree with you. I think that the treasuries are the most predictable instrument, to be honest with you. It kind of depends on what time frame you're talking about, but I think that especially from a longer term time frame, that the treasury market is more predictable. I saw I think it was from Anthony Crudelli, but I don't know. It was from another influencer, and I didn't really want to argue with him, so I didn't say anything. But they were like saying, don't try and you can't predict what the Federal Reserve is going to do, so like just avoid trying to make that play, that sort of a thing. And I was like, are you kidding me? Like they tell you exactly what they're going to do 6 to 9 months before they do it. Like this whole down move that we've seen in treasuries where the interest rates have risen over a percentage point, in the 10-year, for instance. very easy to predict move because they've been preparing us for it since March, since like last March. Like they probably should have done it during the summer. They said, well, we want to hold off because of the Delta variant or whatever the deal was. And then in August, when all that was over, they said, okay, yep, we're going to start tightening. And this is basically our time frame. And everybody ignored it until like the time came. Very predictable in my opinion. On an intraday basis, bonds have a way of defying you. They're a very, very efficient instrument. But okay, so now that volatility is kind of passed and nothing too crazy happened, we can try putting this trade back on. All right. In fact, I will be a little bit more aggressive there at 10.5. Ukrainian negotiator is still speaking. He's saying that any peace deal will have to go to a national referendum, which fine, but it kind of makes me wonder what would be in the deal. So I think that the problem that I still see for any peace deal is that Ukraine cannot give up any territory. Ukraine cannot cede any territory because the way Putin has been working is basically be super crazy, right? And do something crazy and take territory and then kind of back off. And when the Europeans all beg for peace, say, okay, fine, we'll have peace. And then start gearing up for the next little move. And you just do a little bit at a time over years and years. And we get to the point where we are today. So I think that Ukraine really has to say, no, we're not going to cede anything. Yeah, Wednesday is a good for trading oil because you can gain the image. I've had some traders come in here. Sorry, I forget who it is, but there's a regular that I haven't seen for a few weeks, but then they try and trade the oil report on Wednesdays, and they've found a really consistent trade with it. Yeah. But I mean, with the treasuries, it's good because you can game almost every economic report, and there's almost one every day. And you can do the same sorts of things to some extent. ING economics, there's only one direction for inflation in Germany to go in the coming months, and that is up. Yeah, Live Monitor here on Twitter kind of saying the same thing that I was kind of thinking when I heard that Ukrainian negotiator peace deal with Russia will be put to a national referendum. Kind of makes you wonder, like, what is in that peace deal that they would do? Because I think that the main reason you would want to put it to a national referendum would be because it would change territory. And if they're going to cede territory, that's like a really big problem. You take no risks, you're always risk on mode. That's probably pretty accurate. I think you meant to say risk off mode, but yeah. You never hear me talk about the 2-year? Yeah, well, I don't put the 2-year, the big 2-year future on. I just don't feel like I have enough room, and I don't feel that it tells me that much. Like, so here's the thing. I want to primarily trade the 10-year because it's the most liquid. I need the 5 and the 30. I need one above it and I need one below it to be able to see which way the spreads are going. Right? So that's the primary reason for all of that, and have a correlated instrument. So I don't necessarily need to have the 2-year to see that there's a big order down here, and those I'm not saying that those things aren't useful, I just think that the amount of utility that I get compared to how much screen space I would have to devote to it isn't worth it, right? So I think especially on this center screen here, you really want to be stingy with your attention, and you have to say what are the things that are going to help me the most in making my discretionary decisions. Do you trade the UB? I don't think I've ever traded UB live. I think I've tried it on sim a little bit, but UB is a monster. It's hard to trade that one. But I am very risk adverse. I really think that I would do a lot better if I was willing to take on more time frame risk, right? And that's what I would like to move towards doing. It's just that I don't it's just that I don't really feel that now is the best time to do that. I should have been already doing it a long time ago, right? Should have been from December on, essentially. Been trying to swing it and just hold a short in the micros all month or whatever the deal is. But in my defense, futures trading is very difficult to do. You're extremely unlikely to make money on it in the long run. And I think that that behooves that you minimize the amount of risk that you're taking in trading treasury futures. Minimize the risk you're taking and maximize what you're learning, right? Because whatever money you might have to devote to the hobby, you want that to last as long as possible. I think what a lot of people will do is they come in and they'll really start taking excessive risks right from the very beginning, and those kinds of people tend to fizzle out very quickly, you know? That's why I've been around for 5 years and most of those people disappear after 2 months, you know? Seems like a lot of the guys I follow trade UB on the London time frame. You think the 10-year is easier to trade? I do. So here's why I think that the 10-year is easier to trade. Because it is the most liquid instrument, instruments that have more volume tend to have more predictive signals on them. And there's a lot of research that backs this up. This is one of those observations of sorts that researchers have found over and over again that is really kind of bizarre and counterintuitive. I think that they have a good explanation for it in the inelastic market hypothesis paper, but essentially they're saying it because the order flows, because the future orders are the thing that you need to predict. The larger the instrument is, the more flows and the more statistical regularities you might be able to find in that instrument. And so that's why I think you want to go to the thickest instrument, especially if you're going to specialize in order flow. That's going to be like one of the primary things that you're looking at, right? The 2-year is actually thicker, but only because it has hardly any volatility. And over in the 2-year, it kind of works against you because they have it's kind of gone back and forth, but at times in the 2-year, they've had the weird Q, right? So now on UB, that one is just really thin and really volatile. So what you're going to see happen is a lot of retail traders are going to gravitate towards UB because it appears to have the most profit potential. And it's true that if you catch a move in UB, you're going to win more, but you're also going to get stopped out more often and you're going to take bigger losses too, right? So I think that the beginning trader's natural intuition is to go to the most volatile instrument that provides the most opportunity for them. And I don't think that that's actually the way to go. I think you want to go and find the instruments that you're going to have the most edge in. And so if we're trading order flow, if our edge is order flow, then we want the thickest instrument, right? You know a lot about the oil market, then you should go and trade oil, right? If your expertise is in technical analysis, then good luck to you. It's probably not going to work out. But I tell you what, if there's anywhere that it's not going to work out, it's UB, because that thing is so random. It is so random. Trying to trade it with some of the things that these people want to do, I think is a little silly, maybe. I'll put a target up there and see if they come back up to it. I might, well, yeah, okay, I'll take 2 there. Yeah, I do. I have the same opinion on ES being the most liquid of indices, that yes, you should be able to find more predictive signals for it. Now, indexes might be different because here again, there is just a lot of randomness in indexes. I'm not sure what the right way to trade an index is, but I'm gonna bet it's probably not the way that most of us retail traders try to trade it. Because trying to find these how do I say, consistent patterns in ES. I think that a lot of what it does is random. Yeah, no problem, guys. Heck. There's all sorts of bizarre things going on all the time in the Bitcoin community, and some of these Bitcoin guys that talk about it, I'm like, how do you keep up with and stay focused on some of the crazy things that are going on out there? I think at some point you would just stop caring. Okay, well, I tried adding there that this run on the lows a little bit more aggressive. What's your opinion on trading NASDAQ for trading micro futures? So it's really random, yeah. And I've seen more accounts blown on trading NASDAQ than anything else. Mini NASDAQ probably changes things up a little bit, but I don't know how people trade that, to be honest with you. I think that I see a lot of how do I say it? I don't see how you trade it unless you're doing it automated, or you have some sort of automated assistance trading NASDAQ. I really don't see it. Like the question that you got to ask yourself, like, this is really what it comes down to, guys. Any questions that you could ask me about products really boils down to this: what is it that you know that is effective at predicting future orders that most other people don't know about? And why is it that that particular product is going to give you an advantage in predicting those future orders, right? So what is it about the NASDAQ compared to the ES that is going to make it more likely for you to be able to predict those future orders, right? Maybe because you know about tech stocks a lot, I guess, but does that really give you an edge on like the short time frames that people would be trading mini NASDAQ futures for? You get what I mean? I remembered your funny video on the markets. Oh, you'd have to go like so far back on my page. You can go find it. Just go to my channel page and go to videos and just go back like 2 pages or so. And it's like one of the first videos that I posted. One of the first soul videos that wasn't a live stream that I posted. Because we moved all of the live streams from the channel listing, it should be easier to find all of those. Man, my chest here still hurts. Something is probably out and pressuring it. I don't know how to get it to loosen up. Could do this, but that is often not a good idea. To loosen up the center, to loosen up the front of my chest. I don't know. Yeah, Nasdaq is a nasty one. but just think about that. What do you know? Now the thing is when I started on treasuries, I started with the instruments that I did because I wanted to do the order flow thing. I think since then I've found that order flow seems to be a lot more effective than traditional technical analysis, but I'm not entirely convinced that a retail trader can trade purely on the order flow and really have significant success. It's really hard. Okay. There's just a lot of competition, and being at the front of the queue is a really significant factor in terms of making money off of some of these order flow kinds of things, right? So I've ended up relying a lot more on my knowledge of the markets, how to interpret news, how to interpret economic numbers, and edges that we have that will kind of predict what might happen on end of month rebalancing and options expirations and those sorts of things, right? And so then in that respect, I've developed this knowledge that I don't think that as many participants in the treasury market have, that gives me an advantage. And those are the things that allow me to predict future order flows, right? I didn't start with those things, I developed them. So you can certainly come in and say, I can develop those edges, right? But when you're talking about equity indexes, how are you going to find those edges? You know what I mean? Well, there's definitely stuff having to do with gamma that you could trade. So if you're doing the gamma thing, I think maybe you could justify trading indexes. I think that you would want to be a little bit more on the swing side. Like at the very least, like you want to buy it somewhere around the open and try and hold it all day, sort of a thing. You know what I mean? But that's not what I see most people doing, right? Most people, I'm seeing them go like, well, I think that the market reacts to supply and resistance, and so I think supply is down here and resistance. And you try and do that on an equity index, man, it's not gonna work. It's not gonna work very well, I don't think. Because the stock market in particular is incredibly inelastic. Well, I tell you what, the treasuries sure have. So far, it's been exactly what I thought, which was why I didn't want to take a live order. Is it's kind of been choppy and it hasn't gone very far. But it has been choppy. It has been really choppy. Unusually choppy. Probably because of the liquidity, huh? I don't think I can explain why the liquidity is so terrible. I mean, we will get jobless claims tomorrow. I think we have other stuff tomorrow. I really wonder if it kind of comes down into today is just not a very good day to trade at least in the treasuries. Core PCE price index, unemployment claims, personal income, personal spending, FOMC. Remember, Williams speaks Chicago PMI tomorrow. That's a significant one. I do have an FOMC member speaking. I had it on this one, Barkin at 7:15, so in 15 minutes. Crude spiking, good call there. I don't know, that kind of looks more in line with the trend, so I don't know if that is something that would signal there's like news that we're missing out on or anything, but okay, they're gonna trade the bottom. This could this sim trade that I'm trying to pull out, if they go below that oh 06 half, this would be a little ugly, I think. Peter Alexander tweets, new, we believe that Putin is being misinformed by his advisors about how badly the Russian military is performing and how the Russian economy is being crippled by sanctions. A U.S. official tells me because his senior advisors are too afraid to tell him the truth. Yeah? You're gonna jump on natural gas? Yeah, natural gas looks like it's going too, huh? It kind of looks like all of the commodities are trying to stage a recovery today, right? Hmm. Choose one, crude or natural gas. Well, if I was like if you held a gun to my head and said you have to put a trade in one of these two, I would probably choose I would probably choose oil, not because I think that oil or natural gas has a better chance of moving up here in this particular situation or anything like that, but because I think I understand the oil market a lot better than I do the natural gas market. Lucas says struggling to find an explanation for ZN liquidity. I agree, Lucas. I'm not surprised that the treasury market is being kind of slow here and choppy because we did have some relatively significant news with GDP where nothing really happened from it. But why the liquidity was at for a good portion of that time, we were only putting up like 800s, right? That seems a little bizarre. And how is it that they can go from the extreme volatility that they had yesterday to hardly going anywhere today is just really bizarre. And I can't understand why it's that extreme. Why would somebody ask you that with a gun in your? It was listen. It was just a hypothetical. Okay. Well, no, I think what LAFTA was trying to do was trying to say let's do a gamble here. Which one do you want me to do it on? That's what I think he was saying. I was the one that turned it into if they held a gun to your head, right? You can't trade. Well, I mean, yeah. Now, so I'm trying to do a range bound strategy here. This is why I'm kind of doing what I'm doing here. I'm taking on big risk here, right? So for me, the practice is going to be picking the right spots in the range to pull some contracts out, and if it breaks out, being sorting that out correctly, right? So we could lose, and then I get to practice losing and getting out of it fast, right? Or at what point do I get out of it? Um, when you get those ranges, here's what I've noticed is that it will do a move, and especially if you're watching the order flow, you will get some signal that like it's breaking out and it's gonna go. And like that's exactly where it reverses when it's in this mode. Yeah, it's messed up. Also, look how they pull below 1K several prices, which is something I also don't understand. The insight is crazy low. Well, I mean, they're trading 400s right now, and the inside that's not terrible. And they're actually trading a decent amount at some of these, like 1100 at 09 isn't the end of the world, right? Yeah, the range bound strategy works until it decides it wants to drop a point. Yeah. I've never been good at the range bound strategy. That's the thing. So it seems to me that it seems to me that the market maker has the advantage in the range, and if you are informed, you can have the advantage on trends. If you're going to trade range bound, where are you going to pull your edge from? Because I don't know if waiting for it to look like it's really going to go and then reversing that, kind of a high risk, low reward trade, right? I'm not a desperate trader's going to gonna trade. Yeah. Well, why are we seeing the treasuries? Why are we seeing any volume come through in the treasuries at all? It's hard because you pull your stops out a little bit because they go down. Yeah, well, but like that's the thing. I think that, I really hate strategies where the amount of risk you're taking on per trade on average tends to be more than the amount of profit that you make on average. And a lot of the strategies that I see out there, a lot of the things that I see promoted by retail traders, that's exactly what they're doing. But it might be done in such a complex way that it's kind of hard for a retail trader to understand that that's what it's doing. Like adding a bunch of contracts on and then taking them off at different profit targets is absolutely doing that, because if the market goes immediately against you and you stop out on all of the contracts, that's a pretty devastating loss. And the issue is going to be that doesn't happen very often. The statistics work out for the most part, but then there's fat tails. And so this is why you get a lot of retail traders that seems like they do really well for a while, and then they just blow up and they say, oh, that was me. That was on me. I made a mistake. I shouldn't have been taking that risk, etc., etc., etc. But the reality is that the strategy kind of leads you into blowing up at some point, right? But if I'm going to bet you that if you look at like your typical market maker, that their average loss is larger than their average win, and they just have a really high win rate. Probably probably a lot of professional market making strategies are of that kind of category, because in these ranges, I kind of feel like to make money, you have to take on risk a little bit. You have to say, okay, yeah, it shouldn't be busting down here at the bottom. I'm going to fade it. I'm going to add contracts on. I'm not going to have my stop, or I'm going to have my stop really far away and give it a lot of room to breathe, because I don't know how far it's going to come down here, but I'm pretty confident that it's going to snap right back after it's done. Oh, you didn't pick up the guitar. You know what? I don't have the mug over by me either, because my son has been pulling all of the pens and stuff out of it. And so I decided to put all of that stuff on a rack over there that he can't get to. I really need to, I do have some money that I've saved away, but my intention is to not touch it as much as possible, because probably we're going to have to dip into those savings when my wife stops working and having her baby. So I got this big wad of cash, and one of the things that keeps popping into my mind is you should get a new desk. You should build a different desk where all of the cords can be tucked away, where they can't be seen so that the baby and the dog can't play with them. Maybe I should look into that more. I have been able to. I went and I got better cables for my monitors, and that allowed me to move the UPS next to the PC. So, I might be able to put them in some of those sheaths, but I really think that what I need is a desk with a conduit that, here, I'll draw a picture for you. Here's what I'm thinking. Here's what I think my desk should be like. I think I have a desk here like this, and then I want to have like a pole like this. Okay, these will be the legs. There'll be a pole like this, and I can mount stuff onto these poles. It'd be like one there and one there. So you could mount, and then there's like monitor mounts that can mount off of that sort of a thing. Well, I don't know if they make this sort of, actually here, let me draw it like 3D. Let me draw it like 3D. It'd be like this. Right? It'd be like this. Okay. And this would make it easier for me to mount stuff. So instead of having a triple monitor stand, I would just have these, I would just mount 3 monitors onto this and have arms that can kind of extend out a little bit to kind of give me the curve like that, right? And then I can just slide this over if I want to move the monitors out of the way. And I can have speakers attached to these ones. And the lights. I still would have this other light on the ground over here and the camera, right? But then, now that I've made it all complicated to see, I think that from the side that I would have a panel like this. So maybe this is like a metal panel with a grate so that you can see through it, and an LED strip in the back here so that the light shines out, and that looks really cool and high tech. And then in this conduit here, route all of the cables, and then all of the cables can come out in the center in the back here, right? So what are you saying here? It's hard because if you pull your stops out a little bit because they go down and touch it or take it back a tick lower, maybe they take it 2 tick lower and bounce it right back. And Lucas says they're also constantly hedging and re-hedging, which reduces risks. Yeah, I agree. And not only that, but I think that in a situation like this, I think that they can kind of come in and whatever you do, they can basically react to and account for. So you kind of have to be like on the minority side. Like you can't do what all of the retail traders are doing because they're going to say, oh, all of the retail traders are going long, so we really need to shove it down until all of them puke. Like if there's no fundamental reason for it to move, then that is what you would do, right? Well, it's not been giving me these other targets out here, so what I'm going to do is I'm going to try and work my position a little bit better by trying to trade a smaller range. Nice art skills. Anyways, the problem that I have with all of that is that I'm thinking that might be super expensive. Let's see if we can find a system for this. I know that they make these ones that are kind of like, how do you put it? It'll be like one of these. It'd be something like this. And then you put this little hook into it, and that's how those ones work. I know that they make stuff like that, but that's not what I'm thinking about. I'm thinking of like metal rods. I don't know what you would call that. See how these mounts, they're all kind of mounted around a pole? Innovative Sidewinder monitor arm. Can you see, like, that kind of seems... No, that's not right either. TLA Trader. Did you try posting me a link, TLA Trader? Because if you post a link, it will look to you like you posted the link, but we won't see it. The way that you said that kind of makes me think that maybe you tried to post a link. You know what's crazy is some of these monitor arms that are out there are like crazy expensive. This Ergotron LX is probably one that I would do a work for me. Yeah, why do you... Isn't that like a pain drug? Reduces extreme sleepiness. Oh, I see. It's a stimulant. I could see how that might help you. Yeah. Okay. Well, they went through it. That 5-year is pushing pretty aggressively. It kind of looks like they're just going to break to the downside against us. So I think, man, I think if I was doing this live and everything, I would have puked already a long time ago because my risk tolerance isn't very much. But I think in this situation, we should just try and hold the risk a little bit and hope and pray that it bounces back up for us. Yeah, we probably shouldn't talk about those things. If so I'm not going to come in and say, oh yeah, this drug will help you, but if you have a medical condition, a medical reason to be taking a medication, especially a stimulant, you probably should. They probably will help your trading. You know, if you're ADHD, you take doctor prescribed stimulants. That's 100% something that I would go and talk to your doctor about, and look into, because it could help you. And I mean, everybody else, you know, if you have some sort of deficiency, right? You're just putting yourself up online with everybody else. Anyways, the way that it's trading there, it kind of makes it look like, man, this is going to turn into a really ugly bear trend, right? But then I look at it and I'm like, actually, that can't be what's going on right now. So I don't even know what you would call it. A pretty strong, ends up being a pretty strong trend too. -11 ticks down. Not seeing many of the other assets move. We are seeing 6J move down a little bit, so that might be a driver. And we are seeing the commodities gain, so that might be part of it too. Maybe the direction that I've chosen for the day is a bad one. Trying to go short. What do you think? Yeah, I think we should puke it, right? Okay. Should we? Well, there's some volume trading there at 0202 half, so that doesn't necessarily make me want to take a position there. You tend to get sleepy during trading. Yeah. Well, why do you think that that is, though? One of the medications that I take, Strattera, can do weird things with my sleepiness, can make me sleepy from time to time. Yeah. The ZF does seem to be falling harder. It does look to me like you're getting kind of across the board flattening, but you're getting across the board selling, really. Like, yeah, it flattened, but it was really a full across the board. Good morning, Stephen. How are you? Well, let's come back and look at our volume profile a little bit here. So, with that move, we are now below the distribution that we had from yesterday. There is a distribution kind of more in the 28 area that might be like an immediate downside target. Man, this is kind of looking like a head and shoulders sort of a thing. I don't know if you can really say that that means anything, but it's kind of, I would kind of call that the shoulder break. It is kind of suggesting to me, if we're getting a trend here, that if there's another leg to this meta order, that this area 425 to 430 might be an okay place to try and play it from. Since I was not anticipating it, and I don't really have a good reason to expect the meta order or future orders, I think I'm gonna kind of stay back. Let's just kind of see what happens. How exactly do you say that I'm using TA in that instance? Oh, well, because I was coming back and looking at where the distributions were. So when I do that, I'm not saying that we have some percentage chance of going down to 26 half or anything like that. I'm just using those as a benchmark. Like, if we get down to 26 half, I definitely have to say that we got a downtrend and that we're moving to a previous distribution area. But like, I'm certainly not going to come in and say, okay, as soon as we get to 26 half, I want to fade it here or something like that. I didn't do that. No. What do? I say, and again, note I said, well, since I'm not predicting the future orders, I'm not going to take a trade off of it. I need to have something that tells me with a pretty high probability that this is going to predict future orders, right? So something that I could do is I could come in and I could say, Well, we're moving down because of the 6J. And I expect that this will be a 30,000 contract move. We've only traded 12,000 contracts, or sorry, a 30,000 net cumulative delta change move. We've only traded about, let's say, 6,000 of that. 6,000 of that. So we're only a quarter of the way there, and hence this move, just this first leg of the move, could probably continue, right? And that's the way that I would do it. Remember, I was saying, like, if there is going to be another leg to this order, 425 isn't too bad. So far, that trade seems to be working out okay. Yeah, and maybe even here at 122 might be possible. You might see some. It does kind of look like they're going to want to trade a decent amount of volume at 122 here, though. So let's see. That could create a liquidity hole that might give us the ability to play around with things. But the bigger picture here is still that we chopped around and did practically nothing for quite some time, right? Then it broke down. I didn't really see a good reason for it to break down. Do you? Did I close my... I think I did. Why did I close my financial juice window? So there might have been a headline there and I missed it. Let's come back. Russian negotiator Medinsky, if Ukraine keeps its pledges, the threat of NATO presence in Ukraine will be eliminated. Ukraine has stated willingness to meet core Russian demands. Could you explain the relationship of the yen to the notes? Sure. So, in Japan, they are like the quantitative easing capital of the world. They were the first ones to implement these kinds of policies. They've been doing it for decades. It's kind of with the way that they did it, it appears to have led to a lost, that 2 or 3 decades, frankly, a lost generation in Japan now. And as of late, it's been creating a lot of strain in Japan. So something that is not talked about very much, but I think is a very key thing to keep in mind, is that the US has seen more inflation than other countries. So there was a study out of, I think, the Kansas City Federal Reserve, although I can't remember exactly where it was, which Federal Reserve Bank it was. But one of the Federal Reserve banks put out a note and they said, well, when you look at how much inflation we saw in the US compared to other places in the world, and the only reasonable explanation for it is because of the stimulus that we put in. So they were basically saying, yes, it was the stimulus that created the move that we saw, right? Well, in Japan, the deflationary pressures are extremely strong. So I don't know what else you do other than, do quantitative easing and so forth, because you kind of have to fight the deflation, right? So because of this, the currency in Japan is not very strong, and the yields in Japan are extremely low. And so you see all of the Japanese funds, hedge funds, pension funds, really, it's really more like pension funds and those sorts of things, retirement accounts. In order to get any kind of a reasonable yield, they can't do it by buying their own country's debt, really, right? So what they do instead is they transfer the money overseas and they buy the US treasuries. And when you factor in the change in the currency and everything else, it gets the job done for them. So the reason that the yen and the US treasury have such a close correlation is because the Japanese are one of, if not the biggest buyer. And that's why the relationship exists. But you can also kind of see how uh, uh, it might not always be a super reliable correlation. It'll come and go, right? This pullback here is decent. Actually took a little bit for them to change. I don't know. It still looks like it's following the yen. And I don't know enough about the yen to know, like, is the yen gonna like really trend? But that does kind of suggest to me, well, let's try building the position up here again a bit. I don't think they will make as much back from, you know, what happened and what we missed, but we can try building the position out again for fun. Ooh, maybe you call it a truss. Truss. Taurus, I hope, oh, new here, hope all is well. Well, I appreciate it. I'm not gonna say all is well today, but I haven't taken any live trades today yet, so I'm taking a gamble here on a sim account on some mean reversion, but I don't actually know if that's what it's gonna play out, right? Oh no, that's not what I wanted at all. Yeah, they might just come down for a whole nother run. I don't know, the 30-year is being pretty aggressive, right? Because your chances to get 2.425 have been it's been pretty hard to get it, right? Robinhood stock drops? Hmm. Oh, we got the open. We should pull up and check out the meme stocks, huh? Check out some meme stocks. Are they gonna try and push again today, or are they gonna fall apart? AMC. Okay, so AMC is lower, and I would say okay, GameStop down 3.8%. It's not too terrible, but it's not really what you want to see. So far with the AMC thing, it kind of seems like that they've been running into the same kind of trap and problem where the day that all the retail traders have interest, they just all try and buy it right on the open, and it gets halted. And then as soon as the halt stops, they flip back around the other way, and everybody becomes discouraged, and the volume just drops off. Was it just profit taking from the big run yesterday? That sounds reasonable enough. You want me to check the chart? Sure. Good. New pain. Was a little aggressive of a sell on the open there, right? Well, would you look at that? There's still, I don't really see anything. There might have been, some of that move might have been, I mean, it might have been based off of something that the Ukrainian negotiators have been saying, but it's not too sure. What you got here? Yeah, let's see here. Oh, so Mr. Bond was asking me a question here, and I'm not going to read out his whole question because I think that if he wanted you guys all to hear his question, then he would have just posted it in chat. But um, let me tell you, let me tell you something because I don't know if I made this clear. Although I think I've probably talked about it before, and you didn't realize that that's what I was talking about. But there tends to be a square root law um, to meta orders. So the impact that it will have on price does not scale linearly with the size of the order. It scales on a square root law. So the formula that you use is the volatility of the stock. There's a constant times the volatility of the stock times the square root of the size of the meta order over the volume for the period. And that will equal delta P, change in price. Okay. And that is graphed. That's this. Okay. Now, after that pressure is gone, the impact of that meta order will decay on a 3/5 square law. So instead of this, it's like to the 3/5 or something like that. To the negative 3/5 rather, because this is square root, right? So you'll see this, and then it will kind of settle back. Now, one might think of that as the market makers rebalancing per se. I'm not sure that's exactly what it is. I really think that it is just like the liquidity that this is the memory that the liquidity has because of the empirical properties of the limit order book, and that's just how long it takes, right? So if you know the timing of all of this, you can kind of come in and say, this is how long it's going to take for the order book to recover, and then they're going to start the next meta order, right? So you can predict it like that. Now, the way that I try and identify this point right here is I look for stress in the order book. There's usually a really big transaction there, and you'll see it as like there's a large transaction or a bunch of transactions that all happen in a short amount of time. But the general gist is that a large number of transactions will take place in a single area. And because of that, there is less latent liquidity out there because the people that wanted to trade it traded it, right? So people that want to trade this area, there's not as many of them as buyers that want to buy it below and sellers that want to sell it above, right? Don't think of this as support and resistance. That's kind of a fallacious way of looking at it. Just think the liquidity down here is going to be stronger than the liquidity here, right? And that is where they stop. That's when they say, okay, we've reached the extent of our impact. What I want to do now is I want to back off. So during this period right here where it decays, they don't stop executing. They just execute more slowly. Because the reality is that they might actually be able to execute more volume here than here. They just have to be slow and methodical about it, right? So that's where you're going to see it kind of come back. Now, if you want to push the market the other way, you're going to want to do that, let it start to settle, and then hit it back the other way so that it goes further than where it started from. So that's why when you start to see these meta orders come up, you've always got to be on guard, especially if it's a situation where you think that there's a good reason for somebody to want to fight and take a trade the other way. You should be watching for signs of that guy trying to take the trade the other way because you're not going to have very much time to react if it does, right? And that's kind of the place where it gets hard doing what we're doing. We saw it yesterday, right? Those moves came all the way back. And because I was pretty sharp yesterday, we were able to avoid losing very much of our profits from it. Right? But yeah, that's kind of how you that's how I would analyze it. And what I think happens is I think that market makers kind of intuitively know that this happens. And so that's why they will pick certain areas to try and rebalance at. And probably some of those large transactions do happen in part because of the market maker. So, right, because then the market maker is going to take on a bunch of contracts. And because of that, he's not going to want to put out as much liquidity. And then you get the hole. Bada boom. So that's how I would look at it. Oh yeah, what was I doing? I was looking for I was doing some Google searching here in the other window. Oh, there you go. You found the video. Cool. So one of the things I've been thinking here is like, Should I try and rebalance it a little bit out? I could also think about adding to it here. I don't know. Well, I'm feeling dangerous today. I'm feeling dangerous today. Susan Collins becomes first GOP senator to support Judge Ketanji Brown for Jackson for Supreme Court. So I don't think that the shenanigans that we were maybe thinking about happening will actually ever happen in uh for the Supreme Court pick. Republicans will be very upset about it, but hmm. Dan does not want to short. Well, dude, so we're definitely at the moment seeing currency flows dominating the treasury market, and that 6J move that kind of led to our initial downturn flipped around pretty darn hard, and the dollar moved lower as it happened. Since I don't understand the 6J or why it might be moving in that way, it's really hard for me to say if it's going to continue. But just kind of realize when we're looking at this, okay, we did see a 10,000 contract change, and of course, anytime that we see a move, you're going to expect to see a pretty decent change in the cumulative delta. But at the moment, it seems like that the driver is the currency and not some sort of more fundamental meta order in the treasury itself, right? At least that's my theory. So if that's the case, then do I have a trade? I don't think so, unless I want to just gamble on the momentum continuing, because we do have some reasons to think that with the way that it bounced back up, that the treasury could probably revisit the highs of the session now. So if we were just trying to do noise trading and take on risk, that's probably the correct risk to take on. But I don't have anything that tells me that those orders are really going to come. Hmm. I've kind of been like slowly trying to find a different kind of monitor mount, but I'm just not seeing it. I think my idea for a desk, I'm not really finding the hardware for the my idea for a desk. Yeah, it was a pretty choppy. The S&P 500 seems to be as directionless as the treasuries are, huh? Well, if we come back to this view op here, I'm gonna load back up. Hmm. It is kind of coming back there. Let's see. Not quite there, but it does kind of look like it's going to do what I was suspecting. You think? Mm, it looks awfully close. Sorry, I don't know what else to say about it. You buy a 122.12. Oh, sorry, I missed your comment here, Taurus. How come VWAP on the Jigsaw order book is far different than my session at times? It probably has to do with when you have your DOM reset. So my volume and everything for the treasuries um resets on the pit session start, and you probably have it just the full extended session. So where your VWAP is will probably be a little different from where mine is. It's kind of a problem with VWAP when you think about it from that perspective, but how do you change that? So when you are selecting your instrument over here, there will, in the bottom right corner, there is a drop down for this session. So see, I have my session set to CBOT, which is the basically the treasury pit session. Yeah, they're not filling me yet. That oil still seems to be rising. S&P 500 is doing okay. Did I close my window for meme stocks? It looks like I did. Well, in the first 30 minutes, not too much happening over there. AMC is down slightly. So they're just kind of slowly fading so far. Come on, come on. Hard to get filled, so that's not super encouraging. I'm feeling a little sleepy today. Hmm. My body probably didn't recover very well from. I need to work out hard today. Noticed only half hour has passed since the open. It's it's a slow session, right? I mean, Thursday and Friday might pick up, but it's really unusual to see a Wednesday be like this, right? Mm. News Squawk just repeating that headline that we read a lot earlier that the Russian officials are too afraid to tell Putin the truth. Wow. S&P 500 running. Didn't get that move back up that we wanted. See, this is, I think, kind of more of what we want. Right? Something where you've got these wide tracks and you can mount the monitors anywhere along that, right? Except for that, I would prefer that instead of it being like a track, that it would be like a pole so that you could be easier to mount camera equipment to it as well. Let's see, your heavy bid spreading into the twos. Don't know what the other leg is. Oh, okay. We are seeing some reversion in the spreads though, right? Not too sure it's anything too big though. That could just be rebalancing. Have you ever seen a monitor mounting system that's kind of like this, except for instead of it being a track, it's a pole that they mount onto? Maybe that wouldn't work because if it's a round pole, how do you prevent it from slipping? I don't know. Plus $2,300. Wow. So there are truss mounts. This site might be one of your best bets. When you go into poles, see, you only get vertical poles. Unless there's like ones that are like 6 screens. Let's see what happens when we do 6 screens. Yeah. That's more like what I want. Truss. See, that's a little different. Pipe structure. That looks like it might be it. Okay, so let's go look for Vivo. Vivo mount. What is VESA adapters? Release plate. I see. So I would like something that has an arm like that, but that the thing that it mounts to is horizontal pull. Hey, we got our trade. That makes me happy. We still got to make like 700 bucks to make money for the day, but I'm glad I did it all on Sim, huh? See, there's these ones that the pull is vertical pull, right? Be like a vertical pull and then 6 mounts off coming off of it. Man, it's getting hot in this room. I don't know what to do about the temperature in here, man. Like every year we have this problem, right? And I don't know how I always sort it out. You say NG is making predictable moves? Mm. I think that those are all mantras to try and convince yourself to keep trading a method that doesn't work. Just saying. Stripper pulls. This still gets me, this whole thing that like this, the stripper pole spins, right? That's how they do all that stuff. It's all about basically hanging onto the pole as the pole itself spins. That's how they do that stuff. Oh man. See, that hex monitor stand, that's probably about the best you can get, right? The problem is that I don't want to see. I think I'm only ever going to have 3 monitors. I don't have any intention of getting like 6 to 8 monitors. I don't think that that's necessary, and I'm gonna try and make the case for. I make the case for that in the video that I'm working on right now. But what I do want to do is I want to be able to mount other things, because what I hate is these little things where it's you clamp it onto your desk and that's your mount, right? I hate having like 4 of those, right? That's the thing that I hate. So I have one for this light, and I have one for this camera, and then this light just stands on the floor. And then I have 2 audio monitors that are like off to the sides, and those are basically behind the monitors right now. So in order for me to really use those, I have to completely change things. You get what I mean? Seth, you did an interview with Gary Norton. Yes, I did. I thought it was pretty good too. It was really fun. I think that you get a lot of knowledge from him about arbitrage kind of strategies. I'd like a soft discretionary arbitrage. That's what I would call it. And he doesn't use that word because it's not as marketable and might give away too much about how he does it, but that's basically what it is. It's funny that other setup that we were looking at a while ago, right? It's a pretty similar stuff. It might even be made by the same manufacturer, but because it's the premium arm, they are charging way more for it, right? Big money in art, but it's competitive, right? I think Gary's argument is that retail traders can find those opportunities. You just have to really look for it. I think that some people are trying to do that between the Nasdaq and the S&P 500. I'm a little skeptical about how well that really works, though. How high did we get? 43? You could have made 40 bucks, but let's say you did 30, 30, maybe 40 bucks. But what did we have that really would have told us that that would have reversed so well? Well, I suppose you could have made the bet that because we've just been mean reverting in general. Well, so GM, he has the when if you watch the interview, the reason we were doing the interview was because he created a new trading course. I have to say, it's quite expensive, but it has videos and a lot of content. I think that kind of what happened was they. Here's what I think happened. I think that he wanted to put together, he had put something together because people are always bothering him about it, right? And so he put something together with Jigsaw, and I think that they just kind of slapped a price on it. Not like there, I don't think that there was ever the intention to be like, this is going to be like a big moneymaker for us, and we're going to, I don't think it was like that. I think it was just kind of like a spur of the moment, like, well, I kind of need this. This would help. Whatever. Put $1,000 on it, right? Um, and then it ended up doing a lot better than they expected, and so that's where I think that Gary decided that it was probably in his best interest to go on his own. But then I think the other thing was is that it did a lot better than they thought. But there was also a lot of complaints about the content that people felt that for the amount of money that they were spending on the course that they didn't get as much content as they wanted. And so Gary went back and like made a real full-fledged course out of it. So it's crazy expensive. I'm not I'm not saying don't take my interview as like a fully fledged like support of, oh, this is a good education system, you should go use it sort of thing, because I don't know, I haven't taken the course. um, but I do think that Gary is somebody that has a lot of knowledge and experience from the institutional side. And I don't think that Gary necessarily understands all of the math. Basically, this is what happened was back in the day, all of this stuff was done by hand. And then those guys were replaced by robots, right? And there are some advantages. There are some things that the robots just can't replace. And because no humans are doing that anymore, the kind of the esoteric knowledge about how to trade that sort of thing has been lost. And so he's trying to keep that knowledge alive, which I think is an admirable thing. But that also means that the math that replaced him, he doesn't understand that stuff as much. But it's interesting because we understand the math to some extent, right? We at least understand the optimal execution math that's out there. That's what I've kind of been more specialized in, and a little bit to the market making math too. And it all very much is in line with what Gary says, that you markets are very statistically efficient, essentially, and trying to set your value based on some sort of, support and resistance line, or where volume traded at before, and so on and so forth, ends up being a really poor way to, you know, to anchor yourself, right? And so it makes a lot more sense to try and do an arbitrage strategy, right? So that's really what it is. because he knows that the way that the banks make money is they don't sit and do technical analysis and try and predict where it's going to go in the short run, except for maybe very, very, very short time frames. Right? They are trying to do things that especially banks like Goldman Sachs and Morgan Stanley and JP Morgan. The reason these guys have been around for so long is because they basically, their objective is to take no risk, right? They want no risk trades. Because they know that if you're taking on any risk, that eventually something happens and screws you over. And they've been through it so many times that they know that they can just make money by taking on no risk, right? And that's essentially what arbitrage is supposed to be, is like minimal risk, essentially. Yeah, we're back to the open and the bonds accomplish nothing. Well, I still wonder, I mean, the move happened purely, I think, was very correlated with the 6J. What was the driver for that move? I don't know. I don't see any kind of news driver or anything like that. It could have just been somebody looking to stop us all out. I don't know. They said, Seth is in a long trade. Let's just go stop him out. And then, okay, good. Except for that I anticipated today was going to be like this and I didn't trade it on a live account. And hey, by the way, let's take a few off here because that will put us profitable. Ugh. I really don't like looking at other creators' stuff, to be honest with you. Usually just makes me mad. Always pretty small. Oh, looks like he tries to do live trading now. That's cool. He's live streaming. That's admirable, right? You live stream it. But what is his top video? Well, he has what is Pirate Traders? I don't really see anything about how his strategy works, so I think it would be really hard to tell you that sort of thing. Well, it does look like he's using TPOs. And it doesn't look like he's looking at... Oh, he's trading live right now. I don't want to look at the live one right now. I want to look at a previous day. And what platform is he using there? That looks like that's Jigsaw. No, that's not Jigsaw. That is... He's using Thinkorswim. Yeah. No thanks. The commissions on Thinkorswim are terrible, bro. You're gonna trade futures. Get a futures broker, man. Well, I'm always, I know that I say it's like a lot of other... It's not, listen, it's not like other creators are bad people or I hate them or anything. I think that's just kind of the way that I am, right? Is that when I look at other people trying to do the same thing that I am, all I can see is what they're doing wrong and what I don't like about it, right? So this, and I kind of like to be independently minded. I don't want what I'm doing to be affected by the way that somebody else is trying to do it. You know what I mean? So that's kind of why I do that. And more so to the point, the thing that I'm trying to teach you guys, I don't know how to do it. Like, here's the thing. How do you get people to listen to you? It seems to me like the way that you get the really dedicated, loyal, like the people like you guys that are here every day, right? Is there's really an emotional aspect to it, right? Like, I think that we're considering that we're just interacting through chat. I think that our community is really tight knit considering the medium that we're interacting with, because we've been on this emotional journey like a dozen times before, right? You know, have some success, lose it all, have some depression, start over again. Like that's the thing. But when you get that emotion in it, if you tell people, "Yeah, I'm gonna make you rich," and all that sort of stuff, works really well. Works really well, right? Um, and most of the people in the futures trading space don't do that. But anyways, I'm saying, hey, if you want to be successful, don't come and look at some guru that makes you excited and get all hyped up to trade and that you're going to make millions of dollars and stuff. Do the scientific method. Do the scientific method. So how do you essentially effectively promote and get those dedicated followers when your message is the scientific method? Because I don't think I'm the only person that struggles with this problem, right? Like, I'm doing it on trading, but then there's plenty of other people that their thing is astronomy or physics or whatever the deal is, and there will be people out there that end up being way more successful than them because they're able to get their followers all excited about the flat earth or whatever the thing is, right? Like the scientific method, it's hard to promote, you know? But that's a big part of why I tend not to like what I see from other creators. Because what I see from other creators is, here's a system that I've developed and used. It's based on what I think about markets, and it's been successful for me, so maybe it will be successful for you. And that is really the antithesis of what I'm trying to teach you guys. Because what I'm trying to teach you guys is don't look at my performance. Any retail trader that you're going to look at, if you really go into it deep enough, you're going to realize that their performance isn't that great. Anybody that's that good at this sort of a thing is going to go and do it for somebody else. Is going to go and do it at a bank probably. Okay. So temper your expectations, right? So in that kind of a situation, and not only that, but if it becomes too popular, then the edge goes away. Okay. So how do you deal with that kind of a situation? You have to use a scientific method. You can't trust what other people are saying. That's a heuristic that we developed and works really well for the vast majority of human experience, but it doesn't work in the stock market. The stock market is too complicated. That's really what it comes down to. It's too complicated. It's too complicated, and the actions that you do affect the system. So you can't rely on other people's experience. You have to use the scientific method. And some of the research that I'm starting to get into now really suggests that our human minds are not capable of processing the complexities of the markets to really effectively do what we want to do. That you need the assistance of machine learning, right? So yeah, don't go and follow some other guru and their method. Use the scientific method. And you've got to have some science and data to make you think that things might do a certain thing, right? Yeah, he's definitely doing TPO stuff. But, so if I'm watching somebody, if you find somebody and you really think that I would enjoy looking at them, right? The thing that I'm going to need to see to be like, oh yeah, I really do like that creator, is that they're gonna show you some evidence of some sort. They're gonna cite to study, and they're gonna show you numbers and things like that, right? And it can't just be like, we have a 80% chance of extending the overnight range. No, it has to be like, okay, when you do a trade based off of this is what happens. when you execute this many orders, this is the impact that it tends to have on the markets, right? That's what I want to see. That's what I like to see. That's cool. Wow. Okay, so I just pulled up like one video and it was like way too loud. Hold on, let me watch this. His production quality is way too high for what he's doing and the number of subscribers that he has, and that makes me suspicious. It's not like that's like a guarantees that there can't be any use from listening to them or anything. But especially when they're doing that out of the gate, it kind of suggests that they don't really care about trading. That we're always out from the very beginning to make money off of just having a big YouTube channel, right? See, this is how I go. I just don't. There's individual things that I like about certain creators, like Anthony Crudelli. I think that when you talk about like just the journey of being a trader, I don't think anybody knows more about that than him. I think that he uses technical analysis, and that, you know, there's some things that he could learn from our channel, right? But in terms of having been successful at a period and the journey of being a trader for a really, really long time, nobody else out there in the public better than him, without question. He pulled $1 million at one point in his career in a year from market making. That was a long, long time ago. Like, he's been doing it for a long, long time, right? It's almost criminal how undersubscribed his channel is, right? Futures Trader 71, like for a lot of the like getting started in futures, I've been trying to do this. I don't think so. He has this series of like 4 to 6 videos, I think, that he did on Futures IO. Anthony, who's Seth? You mean Seth, who's Anthony? Anthony Crudelli. Go and search for his YouTube channel. You'll find it. Futures Trader 71. That series that he did on Futures IO, I found that really useful when I was starting out. I've been trying to create other resources, but I just don't think that I've created something as good as that yet. I think that we're going to. I think we're going to get there, but yeah, he's really good for the beginning stuff, you know. But then he's like, I got the group where you pay a monthly fee, and I kind of wonder, like, are you really getting it from doing that though? I don't know. Like, if there was a trading service out there that was going to show me like the Charlie McElliott kind of models, wasn't just gamma. It'd have to be more than just gamma. Spot gamma is great, but I think that more than that, all of these different systemic types of strategies and what they're doing at the moment on a day-by-day basis and giving you biases based off of that information, then I would pay for a subscription. Some of the statistics that I'm seeing out of that other services, like I have an indicator out there in the downloads channel that you can download for free that will tell you the same thing and allows you to modify it and create your own stats. You know, it's just kind of those things. It's like nobody's perfect. But but that's the thing, is like I spoke with a Future Trader 71 one time. He didn't have very much time to talk with me, but I really enjoyed talking to him, and I hope I get to meet him in person in the future and get a little closer. But the thing that I want to see, and the thing that irks me, is I want to see people saying, let's trade based on empirical evidence. That's what I want to see, right? That's the thing that bothers me, and I don't see from anybody else. Problem is that everybody's risk tolerance and patience are different. It's when I realized this and quit caring what everybody else was doing and started caring about what I needed to do things that I started to find consistency. Yeah. Well, so I think one of the things that's helped me a lot is just not caring what I'm getting or what it's doing, because I think that the reality is that a large portion of the edge that you can develop as a retail trader is taking on risk. And I don't like taking on excessive risk. I don't like doing irresponsible things, but you can develop a system where you can do really well from taking on significant risks. By the way, we're getting the oil numbers right now. And if you can know a lot about the market to know where you can kind of manage your risk to reduce it and kind of get away with that sort of stuff. I think there's some problems with that sort of a thing in the long run, but the majority of retail traders that you're going to come across in the future space in particular that have made money, um, the money that they've made was probably largely to them taking on risk primarily and not any kind of edge in the predictions that they're making and stuff, right? And where I've struggled is that I am very unwilling to take on that degree of risk, right? And if I was willing to take on much more significant risks, I would probably be, you know, maybe would have even have tried doing it as a day job. Although I don't know if that would really be a good thing for me, but is what it is. After my first account blow up, I'm under the impression that the faster you intend on going, the less likely you are to survive, and if you do, you are a survivor. Well, if you're doing it right, if you're doing the risk taking right, you should be able to get away with it for about a year. Like what will tend to happen is once a year we will have a spike in volatility where the markets get really crazy, and then the volatility goes back down. So if you're lucky, you will be able to continue going until that volatility spikes up. And usually what happens is those traders that are just trading the volatility and they don't know enough about what's going on in the underlying market to understand when that volatility is coming and adjust, right? So usually when the volatility comes, they blow up. That's usually what happens. Well, go find it. Like if I came across a creator that was showing us real solid research, I would love to try and work together with them, right? Like that was one of the things is like I wouldn't mind working with other channels, right? Um you can grow the channel and the community a lot by working with other traders, right? But I've never really been one to reach out. And is that just kind of pride on my part? Maybe. But I think the thing that would make me be like, oh, I really have to work with this person is they're showing empirical evidence, right? Like some of these researchers, I would love to have them on the show, right? Podcaster quality commentary thing. I appreciate it. I think that that we could do a lot better than we do, but I'm pretty proud with what we've done so far too. Certainly a lot further than I ever thought I would take it. Like seriously, man. Oh man. When I started this channel, I really thought it was going to be that I was going to record everything for a month and then never touch it again. That's really what I thought was going to happen. And then I got hundreds of subscribers from you guys seeing it on Futures IO, and it was like I had to keep going. It was like obligated to keep going at that point. And I've gone so many times and especially recently, where I really wanted to give up, and then you guys just suck me back in. But I have thought about it like, well, I've really changed in my opinion of like, oh, I really need to scale back on trading and do more research and spend time doing other things. I do think that I need to do that, but I don't think that I need to be as extreme as I was talking about it, and I don't think that I need to do it at exactly this moment. Because I tell you, here's what's going to happen, guys. You're going to go on vacation next week, and I'm going to be, I'm going to start working on becoming a qualified investor or whatever you call it, right? In June or July, my wife is going to have a baby, and I'll probably take like the first month off and then take off a little while and then take off more time later in the year when my wife starts working. And it probably won't be like it was with the pandemic, where my wife was able to just go on unemployment because of, they were basically paying people to not work and stuff. Excuse me. So when that happens, I will probably be able to spend more time on videos then as well. Right? Yeah, thank you. Wasn't exactly planned, but I'm glad to have kids. Man, I don't want to change subjects, but I was thinking about that every time on TikTok, there's so much discussion on TikTok about relationships between men and women and things like that. And every time I watch that, it just always comes back for me to like, guys, if you're not having kids, what's the point of marriage? Like, really, what are you gaining from it? From the legal contract of marriage, if you're not having kids. The real problem here in this society isn't this, that men are toxic or that women are being sluts or anything like that. The real problem in this society, the real evil, is telling people that having kids is unfulfilling and that you shouldn't do it. That's the real evil, I think. Anyways, I digress. Gonna have a kid. I'm hoping that might give us some opportunities, because when we did last time, we had some opportunities, and I didn't really fully take advantage of it because of reasons. Try it for a half an hour. The title does attract day traders because I think that it affects who it sends it out to people, right? It kind of seems to me, I don't know if maybe I'm wrong, but it kind of seems to me like the YouTube algorithm says, we want this guy to have 16 to 32 viewers. And then when it gets to that point, it's like it stops sending it out to people. Like, the engagement that we get, the amount of time that most viewers watch it for, isn't high enough that it wants to send it out to more people. Does that make sense? That's kind of why I was getting to that, why I was saying a lot of the things I was, because as YouTube does it now, and I'm sure that at some point in the future they will change it, and I'm sure that there will be a time where live streaming is a much more essential part of YouTube's strategy. But with the way that the algorithm works right now, we don't grow the channel very much by streaming. We just don't. It will be interesting to see next week, and I really got to make sure I get my video done so that you guys have a video to watch on Monday. But it's going to be about monitors. I think it's a cool video. I think that it will be a popular video, but for some of you regulars, it might not be as interesting as some of the last content that I put out, but that's okay. We'll see when I don't stream for the whole week how it affects the channel, right? G95 says, I don't think you're ever going to get married. Well, I mean, if that's what you want to do, that's fine. But I think that there's this group of people out there that are saying that that's what everybody should be doing, that you should be working in your career and partying hard, and that's where existence is at. So the reason why this kind of comes back into my mind on the 4 is because one of the things that I was thinking about was like, guys, I'm having babies at basically 37, right? This last kid, I will be 37 when he is born. That means that I'm going to be in my 50s when he graduates, right? Now, this was not by choice. My first wife, we tried and tried and tried, and we couldn't have kids. And then I got remarried, and so we want to have kids when we got remarried, and that's why we're having kids so late, right? But can you imagine the difference? You go and you have kids when you're 21, right? So that your 40s and 50s, you're free from kids and you can do whatever you want. Oh, and by the way, you have the money to do stuff because you worked hard in your 20s. But that's not what society has been telling everybody. The society has been telling everybody, party hard in your 20s and don't start the family until you're like in your late 30s. And there's some very severe negatives from doing that, man. Like 50-year-olds are not meant to be raising kids, You started the baby thing in the late 40s. Wow. Well, I mean, if your wife is a lot younger, remember that after 35, women's fertility drops considerably, right? I'm kind of starting to get like overstaying my welcome vibes here in the treasury. I'll leave an order out there and we'll kind of monitor a bit more. You met your profit. Good job. This was for you to do that on a day like today, that's really something. Because if I had traded my live account, I would probably be down on the day, wouldn't I? Huh? Probably would have taken the loss on the initial trade, and then I don't think that there's any way that I would have taken the reversal. Ooh. I'm retired. College costs. Oh, no, I did it. Yeah. It's going to be, for me, it's going to be like right when I'm getting to the point to where like I could probably do whatever I want. I'm just going to have to work harder to try and be able to get the kids through school. Yeah. Yep. Anyways, on the stream, there's also the whole thing that like when I kind of have this breakdown, there's going to be people that are going to be like, well, what Seth's doing is not going to work. I'm not going to watch him. Because they're probably watching for the wrong reasons, right? But I don't know how you deal with that. I don't know how you deal with that. I don't know if there's a solution to that. So that's why, again, I say like, I've kind of come to the conclusion that the stream itself doesn't build the channel that much. I do the stream because I enjoy the stream and because it's the thing that that can help you guys the most, really, right? And that's the thing that gets the community tight knit and everything else like that. But normally speaking, the stream is going to be like a funnel goal. Like your funnel is to try and funnel people to the stream, and then when they're on the stream, then if you want to make money from subscriptions and selling services and things like that, you can get more people to do that stuff through the stream, which I'm not as big on promoting. I do have my indicator package, which I think is a really, really great deal. And by the way, I appreciate it. I've been seeing a lot. You guys wanted me to change it from a subscription thing to just a one time, and I made it really cheap. It's only $100. And I've been seeing a lot more people use it since I moved to that. And I mean a lot more, like 3 or 4 times more people. So that's really cool. And I think it's a pretty good system, right? But I don't like yapping about it all the time, because some people, they really make their selling their thing is like the whole purpose. The whole thing is just one big infomercial. You know what I mean? No. I've kind of come to accept this, that the popularity of this stream just kind of comes and goes based on how well I'm doing and how neurotic I'm being and what the YouTube algorithm is doing, and that it's unrealistic for me to expect that, the stream is going to become massively popular and bring big success for us or something like that. No, probably never going to happen, because it's just not the way that the algorithm works. I hope we don't lose our subscription when a big firm buys you. No, I don't think that will ever happen. If something like that happened, probably what the case would, because the license that you got, once you've been set up with the license, I'm never going to touch that. And that's all on NinjaTrader servers, right? So if anything like that ever happened, and I don't see why that would, but it would be the case that the zip file that you installed, you'll always be able to use that. But probably we would expand the framework or add more tools or create another platform, and you would maybe have to pay to get onto that new platform. You should start a Discord. We do have a Discord. The Discord is actually very popular. Largely because we've been linked by the futures trading subreddit. But every YouTube video has a link to the Discord. Discord has been a little bit quieter as of late, but I think that's because we're in a lull of inactivity where there's been really excessive volatility and a lot of retail futures traders got washed out of the market from this. Yeah, and what happens is after the stream, that's where I will primarily go to comment on what I see going on and kind of chit chat. So definitely check. I'm trying to change things a little bit, because most of the activity happened in the equity indexes channel, and I'm trying to move it to this main chat channel that I created. So that's where you should go and yep. My other son suggested the cybersecurity thing. I need your opinion. Boot camp or traditional? Good career. So I think that cybersecurity is definitely a good industry to go into right now. Cool. Yeah, say something in the active chat channel and I'll give you permissions to post pictures. I think that cybersecurity, it's a growing area, and it's only going to grow more over the next few years. And it's pretty specialized knowledge. So I think that makes it easier to be something that you go and you take some course online or something, and you can get hired from doing that. Just realize that it is something that is going to take you some time. It's just there's a lot of stuff. There's a lot of stuff to know, and gaining the experience in cybersecurity stuff is kind of hard. So it's probably something where you're going to take school and you're going to struggle for a while to build up the experience and get a job. But then once you've got your first job, it's just like the doors open and the sky's the limit. It's a good place to go, yeah. And it's something where, always going to school and getting a computer science degree gives you a leg up on the competition. But cybersecurity is based a lot more on certs and stuff. So, yeah. I'm really interested in getting more into machine learning stuff. I have been looking at, maybe I go and just work for a firm of some sort. If I can get a job doing more machine learning and trade backtesting sort of things for a hedge fund or similar kind of organization, I think I would do that. And if that happened, it would probably be sad for the channel, because it would probably mean that we can't continue streaming and creating more new content for the channel. But you know what? I've given you guys the most important stuff. Like those last 2 videos that I posted, that's I think the world. Like I really don't think that we realize how significant that information that I'm giving you really is. That really should be the basis of all day traders. That should be the first thing you should learn is the inelastic theory of markets and stylized behaviors of markets on a general level. Instead of all of this moving average technical analysis BS. You'd be a better trader. You start at that. And when you start from that foundation, it's going to save you so much time wasting it on stupid crap like what most people do. So I don't think that even we realize how significant it actually is. And I expect that in the future, more and more people will pick onto it and that it will become more of the standard thing. But it will take some time. It'll take some time to get there. But you guys have that stuff. So if that happens, you have what you need. And a lot of you guys are better traders than me anyways. But if I don't know if there's going to be many opportunities for me to do something like that and stay in Utah, or if I'd be able to convince my wife's ex to move to New York or Chicago. But it's something I'm keeping an eye out for sure. That's for me, because I want to spend more time on the machine learning stuff. Wow, family friend just sold his hedge fund for $600 million. I would love to know how he does his strategy. Like I think that's the world that I always should have started with. Like when I started, I was like, let's get into a bank, you know. Really, what I should have been doing is I should have been trying to get into a hedge fund. Oh well. I tell you what, if I could go back and do it all over again, there's definitely a lot of things I would have changed. My life could be very different. Like back then, I was more interested in, you know, starting a family and all of that sort of a thing. And because of the way that it went, I think that I would have been better off just like staying unattached and going and yeah, still going work for the bank, but try and move to New York almost immediately, you know, and take advantage of the opportunities there. This is the same thing I've heard from quants banks or no-go prop firms, and hedge funds are way better to work at. Well, I mean, I think that there are banks doing quant stuff too. It's like way more of a specialty in there. It's not like the core business like it is a hedge fund. That's the only reason why I say that. Do you think many market makers copy each other's script / code? I think no. So mine maybe I should go back and look for this stuff, but remember there was this whole thing about a Goldman trader like stole some of their code and put it out on the internet and everything? I think some of the people in the industry said that what was put out wasn't that special, but it would be a good basis for us to study. But I do think that a lot of market makers probably end up basing things on very similar models. And so even though they all wrote the code themselves, probably the mathematical principles that they're based on are all pretty similar. That's what I see. Like we had a really good move up after we broke the highs here, you know? It's been rotating around this 16, which you always kind of see funky things happen at 16, right? I'm not really seeing a whole lot to give me confidence that there's going to be another further move up today. I'm not going to rule it out, but it's just at the moment, it's not looking very hopeful, right? They don't. When you leave a fund, they put you on a garden leave for a year just so the info does. Yeah, that's true. That is definitely true. You basically have to go into a different industry. When I left the bank, I was kind of like, I think I'm done with this industry. I was okay with going into something different. But then it's like, since I've been trading, the more and more I get into it, because the thing is I want to talk to fund managers. I'm sitting here and I'm like, Seth, what you should have done is try to become a CTA. Yeah, that's exactly. You have good content. So many people chase indicators and the next big thing. This does not often lead to success. A change in volatility, they throw it all away and move on to the next. That's exactly what happens. Yeah. Because again, because I don't think that these people realize that they're being fooled by randomness. They think that it's the indicator that is the source of the profits in the period where they were successful, and it's their psychology in the period where they lose money. When the reality is that the whole time the reason they were making money was because of the excessive risk that they were taking on. And when they fall apart, sure, there might be some mental aspects to it, but the real cause, the real underlying reason for what it's doing is that the excessive risk is catching up with you. And I can very much see that in my own results, that I will come into a drawdown that is just really freaky crazy. And it's like, almost no matter what you do, it just gets ugly, because what we're doing is taking on a lot of risk, right? And that's why most often in those time periods, what you'll see me do is just stop trading it, right? That move yesterday, for instance, like this is a good example. I didn't really trade today, um, largely because I saw that it was likely to be a range bound day. But um, even if there had been some movement, I would have been more reluctant to trade it, because there was so much insane volatility yesterday. And if that volatility were to just continue, right? It's very unlikely that I would continue to be on the right side of that volatility every time. And so when I made a really big winner off of that volatility, that might be a good reason to just kind of like rest on your laurels for a little bit, pat yourself on the back, and just kind of watch the chaos. Depending on market conditions, I think you could use the woo-woo stuff like TA and still make money and just have a drawdown so you know when to leave the casino. Yeah, well, I mean, I think the thing is that there's going to be certain technical analysis strategies that tend to work well in a certain market, and they'll work well until they don't. And being able to predict when they stop working is, I don't know how you do that. I don't know how you do that. So that's why I kind of feel like it's, instead of trying to play that game, it's a lot better to just find real determinants of order flow. That's going to lead to a lot more consistency. Because, so I was reading this in this book. This really surprised me. This should be the last thing that I say. I've been reading a machine learning book, and they were talking about the generational algorithms. So we talked about that a lot on this channel, where they would go and have all of these different technical analysis indicators and ways of combining them together. And then it would just churn through strategies every day and find whatever was working best on the market. And they were saying that there was a lot of firms that were doing that and having success, and then all of a sudden they all blew up. And that industry kind of died. Isn't that interesting? So that's kind of the sort of thing that you would be trying to do, except for without the assistance of the computer, just trying to figure it out. But that's where, again, it's like, I kind of think that these systems are too complicated. There might be some way to look at it and say, here are all of the different technical analysis strategies. Here's the ones that are working, and here's the ones that aren't. And here is the time when it's likely to shift from this strategy to the other. And based on what strategies are popular right now, we can predict which way it's going to go. I think you might be able to do that, but I think that you would need machine learning to assist you in making that kind of a trade. And machine learning is hard to learn. I must say, like, it's not hard to take a model and just stuff into it and start fitting it, but to really understand what they're doing and the statistics behind this stuff is so hard. It's so hard. And the material to learn this stuff is so hard. Yeah, whatever. Well, I have no intention of messing around with this while I'm working today, so I'm going to close this sim trade for you guys and show you the shameful results that we had, where we had a $2,500 drawdown but made $500. Right? Those aren't actually good results, but probably a lot of beginning traders would think like that was great. Conditions need to be adjusted to, yeah. Now I've continued to try to put into my algorithms, like trying to adjust for the volatility, but I've never really been able to find use the range or the VIX to determine what your stops and targets are. The thing that's always seemed to work best for me is like some sort of a walk forward fitting. Like you fit the stop and target based on the time, and then every 3 months you refit it and walk forward. That's worked better for me. Anyways, guys, I should get going. Range bound market. Range bound false breakouts is what I'm going to put the title here, so that if we're coming back and trying to find a day, that would be what we do. We'll be able to tell from the title. I will see you guys tomorrow. So we'll have you tomorrow, Friday, and then remember next week I'm going to be out of town. So I will see you guys tomorrow. In the meantime, stay profitable, friends.